Welcome to the Scalable Real Estate Investing Podcast, where we discuss the most scalable strategies, tools, and approaches to successfully invest in real estate. Learn how to make the most impact of your time, automate your real estate investing business, find off-market deals with minimum time invested, and leverage your capital to create as many income streams as possible so that you can achieve true financial independence. Thank you for tuning in. I'm your host, Mason Clement. Hi everyone, Mason Clement here. Before we get into today's episode, I wanted to ask you one question. Are you sick of the wild swings in the stock market and ready to try something different? Did you know that investing in stocks actually put you at the very bottom of a company's capital structure, meaning that there's practically 0% chance that you're going to get any of your money back in the event that the company files bankruptcy? That basically you're putting yourself in the riskiest position for a questionable return. Personally, I hate the unpredictability and just waking up and having half of my investment gone when I didn't do anything wrong. So what a lot of people don't know is that you can actually make higher returns on a consistent basis by investing in the opposite end of the capital structure, which is actually the safest place to be, which is on the debt side in a first lien position. And you can do that by investing in real estate, and specifically investing with my company in notes that are backed by the land that we purchase. So if you're ready to diversify your income stream, go ahead and go over to scalablerei.com and click on invest in the top right corner. There you're going to find a form that you can fill out to determine if you're eligible to invest with my company, Celion Capital, and we'll be reaching out to you to schedule an introductory call and speak more from there. So thanks a lot, and let's jump into the episode. For those that weren't at the Casual Fridays REI event, Justin did an awesome presentation on subdividing land, how he added it to his toolbox. So I thought it'd be helpful to bring him on the podcast to dig into that a little bit more. What we could do first is just, you could give a brief background about your real estate journey. And in case there's folks that aren't quite familiar with you, but I know most of us here are land investors, so probably at least somewhat familiar with you. So let's just jump into that. What is your background? What brought you to today, Justin?
Yeah. Well, hey, Mason, just want to say thanks for having me on. I see at least Dave and I talked a bit at the Casual Fridays REI event. So, hey, Dave, how's it going, man? Background. So I got started in real estate in 2019. I mean, I guess technically 2017 is when I bought my first house that I'm like standing in right now. But, I wouldn't call that really getting started in real estate. But in 2019, I started buying a couple single family rentals, short-term rental, wholesaling, at least listening to every Bigger Pockets podcast in existence to try to figure out how to do this whole real estate thing. But I did get started sending out direct mail, wholesaling, had a little bit of success. And right around kind of end of 2020, early 2021, a friend of mine named Kyle Bryant was doing land and asked me to invest in one of his deals. And so I did, and basically doubled my money in a couple months. And that was splitting profits 50-50. So like if he had his own money, he would have tripled his money in just a few months. And I was like, wow, this is great. So you're just doing this, you're sending direct mail just like I am for houses, except for you're doing it for vacant land. And instead of spending $200,000 on a property to make 20 grand, you're spending $10,000 on a property to make 20 grand. And I was like, wow. And instead of one response per 5,000 letters, or like one contract, you're getting like one contract per 1,500 letters or 2,000 letters. Wow. Like all these things, going through my head. And so I asked him, hey, can you help me? Like, can I pay you to coach me? And so I can learn this land thing as quickly as possible. Because at that point it'd been, a year and a half of trying to figure out how to wholesale by just listening to podcasts and just taking action, but still obviously not best practices, not learning from somebody who had already done all of those things. And he got me connected with Clint Turner at the Learn Land team. And so I bought some coaching there, watched all Clint's videos, which I think he offers for free now on YouTube. And basically had Kyle as a private, one-on-one coach. Starting in September of 2021, that's when I kind of kicked off the land business. Got pretty aggressive with mailers, and within 6 months, I had enough profit from the deals to replace my entire corporate salary. So was like, hey babe, tell my wife, I think I'm going to do this thing full time. It was at the time I worked for ExxonMobil, and we had just had our second kid, and it was challenging to say the least to be a young family, two small children. My wife works for Chevron Oil Company downtown Houston. I worked for ExxonMobil at the time at a plant out east of Houston, and we were in a position where we were ending. The COVID kind of work from home was ending. We were both going back to work a majority of the time, if maybe not quite full time, but no more than really 1 to 2 work from home days a week. And with new jobs, we were going to be in a position where we were going to have to hire somebody to wake our kids up and bring them to daycare and school, and that was just untenable. The idea of not being able to spend more than an hour with your family while everybody's awake during the day because you're not getting home from work until 6, and then it's bedtime at 7:30, and that's it. And so since I'd already kind of established this side hustle, if you will, that looked promising enough to be a full-time thing, we decided that it would make the most sense for me to leave Exxon, her to stay at Chevron for the time being, and me to go all in on land. So that was early 2022. And then I guess before that, I was in the Navy. You can see this virtual background submarine behind me. This is the USS Maine. That's me wearing an Alabama hat, even though I'm an LSU fan because I lost a bet. I don't know if anybody's a college football fan, but I lost a bet, so I had to wear this Alabama hat all of deployment, and it was brutal. But I think in the end, it got thrown into the sea maybe shortly after this photo was taken. But yeah, I was a submarine officer, left, moved to Houston, worked for Exxon, and now full-time land for a few years.
Okay, cool. Are you from Louisiana originally?
I'm from Houston originally. Well, I guess I was born in Massachusetts, but I grew up from a young age in Houston, Texas.
Got it. Okay, that's what I was thinking. I just was wondering why LSU fan.
Oh yeah, I went there. I was a chemical engineer in college, and they gave me a full ride. And so it's like, hey, where can you go to college? You can go to college for free. I didn't want to spend a bunch of money on college.
Got it. Yeah, that makes a lot of sense. Yeah, I went to UT Austin, and a friend had a full ride. He was also in the Navy, so
yeah,
makes
awesome.
Total sense. Yeah. Cool. So at what point did you realize that you could start subdividing some of the properties that you had coming across your desk?
Yeah. My father-in-law, he tried to do this years ago, buying a property, and he was buying a couple hundred acres in North Carolina, and wanted to subdivide and build a subdivision. He had some health issues that prevented that from happening. But that's kind of the first time I'd really thought or heard of it. That was before that was probably back in 2014, 2015. My wife and I had just gotten married a few years prior, and we were like, oh man, what's your dad doing? This crazy thing, going and buying a bunch of land and splitting it up. But when I started investing in land early on, he has a friend that's actually quite a large kind of land subdivider in Texas, that we sat down for a meeting and he kind of walked me through what he did. So that was really the first time I saw somebody who, in my circle that was actually physically doing it. And I attended the Learn Land event last year in October, the kind of first event that Clint Turner put on. And Justin Sleva, was talking about his deals, the Casual Fridays REI group, talking about his deals. And on the way home from that event from Dallas, driving back to Houston, I was listening to a lot of the REI or Casual Fridays REI podcasts, and they would introduce their land subdividing masterclass. And I had been thinking about subdividing. It didn't seem super challenging to do, but obviously, as you get up larger scale projects, there are quite a few pitfalls and things that you can fall into. And what was really appealing about kind of the masterclass and teaming up with those guys was just having people being in the same room with people, similar sized businesses, all doing the exact same thing, bringing deals in a bunch of different states to the table, being able to fund those deals within the group, if you needed funding, and basically just have somebody looking over your shoulder, answering any questions, shooting down deals. If you get gung-ho, you get emotionally tied to something, and it doesn't really actually work, but you spend so much time and energy getting this deal done. Sometimes you need somebody to just say, no, shut that down. If you want to lose money, move forward. If you don't, then then don't do this deal until you get the confidence really to do things on your own. That was my thought process going in. So that's where subdividing started for me, was joining that group and just being on calls with those guys a couple times a week, and really for the last year now.
Okay, awesome. Yeah, I know I've definitely had that experience where I spend a lot of time underwriting a deal and I just want to make it work. A couple days go by, I'm like, you just have to like look at it from a different angle. Like, is this really gonna make me money, or is this something that's ridiculously a failure? So I hear you there. And yeah, I actually didn't even go through the masterclass. I just kind of like learned by experience, trial by fire. But that actually leads to my next one. So I think a lot of people, when they hear subdivide, they think, oh yeah, so you're in Texas, you must be doing like 10.1 acres and up type of things. But my first subdivide actually was an inadvertent one. I didn't really intend on it, but it was about 2 acres, 1.89. And the seller was like, I'll sell you 1 acre out of this. And I was like, all right, simple enough. Let's do a survey, because I called like the county attorney, whatever. And I was like, what's the process for doing this? He's like, yeah, just record that survey when you record the deed. And I was like, all right, cool. So I sold that 1 acre. The county called me back later. So that was an illegal sale. You have to go through the official subdivision process. And obviously, again, this wasn't 10 acres. This was just like a little thing. I was like, all right, whatever. So I did like 3 publications in the local newspaper and stuff. And it was kind of silly. And, noticed people within 200-foot radius. And it was like, who the hell's going to object? This is like out in the middle of nowhere. And anyway, I was able to like leverage that experience to do a 6-acre piece that I split into 3 lots. And again, it was less than 10 acres. But the punchline is, for you, when you're looking at these potential leads, what's the minimum acreage that you prefer to have? Or is everything kind of a nail and you're a hammer, you're just trying to hit everything with a subdivide hammer?
I mean, honestly, sometimes if there's a way to force appreciation on a property and it makes the deal more economical, then I'm going to try to do it. And subdivides are obviously like a pretty, I would say, like a low bar tool to adding value. You can do horizontal development where you're actually like putting in utilities to raise value. You can do entitlements. Entitlements might be another kind of like something that a lot of people can do. It takes capital, it takes time, it takes connections and meetings and whatnot to get it done. But it's not something that you have to have like this huge crew of people and millions of dollars of capital typically to tackle. For subdivides, yeah, I mean, if a property lays well for a subdivide, even if it's a small tract of land, 5 acres, 4 acres, whatever, if it lays well for a subdivide, great road frontage, similar acreage types around in the area, and the county itself or the municipality has favorable subdivision regulations, meaning they'll allow you to do a lot split with minimal paperwork, or maybe just a survey split, or even if the subdivision process just isn't that involved. Yeah, I will absolutely try to do that. The smallest one I've done was 10-acre, 3-lot split, 3.3 acres a piece, and it was as simple as it can get. Get a survey, file the survey, write a legal description, done. Like no approvals, nothing, because it was above the county minimum in that county, which was 3 acres. And then I've done them. I mean, the one right now that is like the most complicated is I have a 150-acre subdivide in Morgan County, Alabama, and we had, I bought the property in January, and we just signed a contract to get our contractor to dig detention ponds. I have 6 detention ponds, $110,000 of capital, to build those ponds out to improve the property that we're doing. I'm about to purchase a bond from the county for that work so that I can get my plat through approval before finishing the detention work and try to get the lots listed and sold a little bit sooner. But it can get really complicated depending on where you're at.
Okay, and that bond, it's kind of funny terminology. It's technically like an insurance policy, right? If you fail to complete
that's exactly what it is. It's basically, at least the way it works in this county, is whatever the quote is or the bid is to do the job. 150% of that if you purchase a bond, an insurance policy that basically says, hey, if the developer fails to do this or goes bankrupt or can't finish it, the insurance company will pay the remainder to have it done. That's essentially what you're buying. So yeah. A bond is a weird term. Insurance is maybe the better term.
Yeah. But they're paying a different developer to finish it out. Is that how it works?
Yeah, I mean that's kind of my understanding. I've not heard of people. I don't know any like anecdotes. I don't have any anecdotes about developers failing to do this. I'm sure there's tons, but that's my understanding of the way the bond works.
Okay, cool. Yeah, just curious. The goal is not to fail, of course, but maybe back in like the '08 period, there was a bunch of stuff like that. So kind of you already hit on a little bit. But I was curious when you start marketing, because like that 3-lot subdivide I started marketing it, listed on MLS before I even finished getting it all approved and whatnot. So at what point are you like closing on the property first and then getting it approved, or before, after,
Yeah,
during?
I try. I mean, like all of us, right? Same with a flip. I try to shorten the time money is tied up as much as I can, and so typically for like a subdivide, I'm not going to list properties for sale before I at least close on the property, and then I might do like pre-marketing off the MLS until the plat is approved. Uh, I have one coming up actually in Northeast Alabama, a 40-acre tract that I'm splitting into three lots, 12 and a half, 12 and a half, and a 15. And it's an exclusion, is what they call it. Exclusion to, this is not an exception. I don't know why, but they use the word exclusion to subdivide in the language in this county. And so really all I have to do is I have my surveyor survey the property, survey the lot split, prepare the plat. I'm closing on it on Friday. And so on Friday, we'll close on it. And as we close, I'm going to give the plat to the title company so they can file that, they can record the plat with all the deed transfer and everything. And so literally on Monday morning, when everything and all whatever is finalized, boom, I'll already have 3 lots, ready to sell that are approved essentially. And we'll list those, as soon as we get marketing stuff done. I need to do some driveways, so it might be another week or a couple weeks before I actually get the properties listed and marketed. But if they already had great access, like great driveways, etc., I'd list them Monday, like day one.
Okay. Yeah, I think that's one thing with mine. I had to build the road, installed water meters and stuff, and I think without having that road, like before we even like mowed the grass and cleared a whole bunch of cedar trees and stuff, you couldn't even like drive back to view lots 2 and 3 because they were flag lots. And so although there was interest, it was like, Mason, I don't know how to, even look at this thing. Like people are afraid to
Yeah.
start a brush fire. They don't want to drive onto the property, because the
Yeah,
grass
no,
is like
that's a
up to
huge
your
challenge.
knees.
That's it.
Yeah.
I think if you can do that we try to do that on every property we buy. I used to, when I first started in, end of 2021, getting these properties, it was like, okay, we get them, we get a drone pilot out and we list them for sale. We don't do anything. We don't look at them. We don't do anything. We list them. And back then, honestly, like they would still sell. Like it was just things would fly off the shelves. And then obviously 2022, things started slowing down, and it's 2022. And now, we do whatever we can to make the property pretty. And when I say we, I just mean my team, like my employees, my team, the group, try to make the property look as nice as we can for a reasonable cost. I find that people who don't do clear, like don't have experience purchasing raw land, typically don't understand the cost of clearing work. It's really not that, it's not that expensive. And for example, we had a property in Alabama that we bought, and I cleared 2 acres for $2,000. And I mean, this was like, there weren't huge giant trees on this. It was probably 8 years of just wild growth. So we're talking maybe 10-foot tall trees. But I just sent somebody in with a forestry mulcher for essentially a day, and they just ran it over and kind of like pushed all the brush up into a pile and burned it. And we had a really nice, just cleared area, 2 acres that, and we got an offer basically a week later, because from somebody who had already walked it, just didn't understand how much it cost to do it. Now that they could see, oh, it's open, it's easy. I see this now.
Definitely. I mean, it's similar to like a house where you might get something that's all beat up and you want to sell it at a lower price. And it's like, look, I'm providing a bargain for you, but people actually want something that's just a little more turnkey if they're buying off the MLS. So it totally makes sense. Some more turnkey land is really analogous to that. So in terms of like the financing of it, are you just bootstrapping it or using hard money loans, or how's that work?
Yeah, I mean, I'm using whatever tool, whatever financing tool I can. Some of them I just buy cash, do the improvements cash and then sell them. I have 4 of the like 11 or 12 I'm working on right now that are financed by a bank. And so we just a normal, like a local community bank, go to them, say, hey, I have this development project. Here's what I'm buying it for. Here's what I think it's worth in the end. here's my costs, send them everything I have. And they'll give you a loan on the buy side based on the appraised value and at a certain loan to value to cover most of your costs. And I know some guys that have some of their on the bigger projects have some of their capital actually financed as well, like the capital they'll need to improve. I haven't done any loans like that. Most of them are just based on the native asset. And then we'll also partner with people. So I have a couple of subdivides where I essentially take on silent partners, and then my company takes a management fee, and then the equity is split amongst the partners. So whatever, cash, partners, banks, there's a million ways to finance. I haven't done any hard money loans because I've been able to find private lenders at more favorable rates than hard money, but I would not be opposed to hard money loan. I mean, if you're going to make, if you're going to make 100% profit on something in like 8 to 10 months, it's probably worth paying 15% interest, right?
Oh yeah, definitely. So what's the usual equity split if you do a partnership?
Yeah, right now I'm targeting between 25 and 40% returns for the investors. And so whatever the profitability of the project looks like, my company will take a management fee, and then when we get to leave the equity partners with a 25 to 40% kind of return, not annualized, just true return. That's what I'm doing right now.
Okay, cool.
I have not had any trouble finding somebody who wants a 30 to 35% return. Not yet, at least.
Yeah, definitely. So it's not like a typical syndication where it's like this 70-30 split, 30% to the GP and all that.
Yeah, I think it's just different. I'm not making money on fees. Like, there's no fees with any of this. I think a lot of like the typical syndications, right? GPs make their money on the fees, and then they have like upside based on like the asset value in the future. But they've already basically made their money on fees. There's no fees, and in every deal that I'm invested in, I'm actually except for the larger development projects, the two, $1.5, $2 billion projects I'm working on. I'm a majority equity holder and the manager of the deal. So I've taken on minority silent partners that have minority equity stakes in the deals, and then I'm also managing the deal. And so like I would take a management fee for working the deal, whatever percentage that is, and then also I'd take my 30% equity based on my equity percentage of the deal as well.
Okay, based on how much cash you put into it?
Yeah, right. So like I have one where the total cash is, that we just kind of finished doing. We sold one of the lots. I have two more for sale. Total cash was 130, and so I have a silent partner who put in 50. I put in the other 80, and I think on this one the management fee is 65% or something like that. And so when the deal, the way the capital allocation, capital return works is, he put in his 50, I put in my 80. We bought the property, we surveyed it, we cleared a bunch of acres in the front, we put in driveways, cleared a path all the way back to the creek in the back. Whatever improvements we were doing, we listed them. The first lot sold, we netted 70, and so that 70 gets returned in an equity, whatever our equity percentage is to each of us until all of our capital is returned. And then once the capital is returned, the first or whatever, every dollar, 65 cents goes to my company as a management fee. And then the other 35 cents will get split between me and the silent partner based on our equity share of that deal. That's the way we're structuring this agreement.
Okay. Yeah, that makes a lot of sense. It's pretty simple and clear cut. I like it. So when you're determining the size you're going to make each lot, like I usually like to kind of see what are surrounding lots and what's the likelihood someone actually buy this, because maybe you can cut it down to like as small as possible, but if someone's not going to buy it, then what's the matter anyway? So is that kind of your approach, or how do you do it?
Yeah, 100%. I think when you're going into an area, you really have to see what is around and what people want, right? Like, you're not going to go into an area where there's maybe a really rural area where there's a lot of 20s, a lot of 10s, and then take a property and cut it into a bunch of 1 acre lots. Unless that's the path of progress and like you have some information that maybe other people don't. Typically, that's not going to be something that is a profitable, a good idea. However, if there's an 80 and you can cut it into 420s or some 10s or whatever off of a road, and that's what's everywhere else, like that makes perfect sense. People are used to seeing that type of inventory in the area. That's what everybody else has. That's a great kind of cut to do. And what you said about like the way the land lays, yeah, like typically, I mean, you can cut a lot every which way to Sunday when you're looking at it on Land ID or Google Earth or whatever, however you look at your lots to cut. But you really do have to look at the slope. You've got to look at the natural features. You've got to find buildable area on the lots. I mean, we've all, I'm sure as land investors, I'm sure we have all marketed to property, and you get this, from a mailer or whatever, you get a call and they say, oh yeah, I'd love to sell you my lot. You look up the APN and it's just this horrible lot that was subdivided, that's so steep and slope with tiny road frontage. Like there's no way it's buildable. And just like, oh, you poor sucker. Like you probably bought this in 2006, didn't you? 2007. I know you did. I can't buy it. I don't want to do that. Like I want to create a good product wherever I go that's desirable, that protects the long-term value of the property. And so I think looking at what's around there, what's desirable, key. Yeah, definitely.
Okay. But are you usually trying to stay, like you mentioned it earlier, like this exclusion thresholds or like kind of minor subdivides where you can kind of skirt by and sidestep some of the rigorous requirements of a typical subdivide?
Um, if there's not a greater cash on cash return by going the full like major subdivision type approval process, then yeah, I wouldn't likely move forward with that. But if it's a more profitable project by forcing that appreciation, like there's a little more risk to it, right? There's more time. And if you can account for that in your underwriting, you can raise the interest up front if you're getting a bank loan to protect from cash calls, et cetera, for the longer time horizon for a major subdivision, then I think that's a great avenue to go down too. I'm not like shying away from them, maybe is something I'd say. But if it's easier to do a minor subdivide and it's a desirable lot type and you can make still a great cash on cash return on that type of project, then I'll probably err towards the side of maybe like the lower level of intensity development at this point. I don't have like a huge team doing like most of the, so I have a big team for the land investing kind of flipping business, the marketing and sales machine. But when it comes to the development deals, it's really right now it's just me. I'm the project manager. I'm doing all the calls, doing all the underwriting, managing all the contractors. And so it gets to a point where it's kind of challenging to manage a lot of really intense subdivides where you're doing major subdivisions, especially when you're doing it remote, right? None of these are I am in Texas, but none of these developments are in Texas. They're in Louisiana, they're in Alabama, they're in Georgia, they're in North Carolina. And so I don't want to, yeah, it gets tough if you're doing a lot of intense subdivides where you need to go to city council meetings and meet with the engineer over coffee to make sure you can get your plat approved, et cetera.
Okay. Yeah, it makes sense. I think the short answer really just depends on the property, like everything. That's always the answer. It depends.
I know. Yeah.
Okay.
Hate to have a cop out like that, but it really, yeah, it depends.
Yeah, it's helpful the extra context you add around it. So that's great. So on like when you're underwriting something and you're probably looking at your past experience, like what's the average time you'd expect for a local jurisdiction to approve the plat? And like what's your total hold period that you're usually underwriting?
Man. Yeah, that's it. Again,
Probably
it
depends
again. It does, but I'll give some qualifiers there.
Sure.
So if you're doing an exclusion split, like kind of like what my first one that I did in Georgia, which was the 10 acre into 3 3s that didn't require anything, or this other one, this 40 acre into 3 lots that I'm doing, or another 34 acre I just finished up in another part of Alabama. Those are really easy. Like I'm not really underwriting much hold time at all into them. What I'll typically do is like any off-market deal, negotiate a long enough due diligence period to allow me to make sure I'm good to go when we're ready to close. And so right now I'm mostly doing 90-day due diligence periods. I'll typically put $1,000 in earnest, 500 in earnest, just to really have like a solid, equitable interest in the property. And then that 90 days, I'm lining up surveyors, I'm getting quotes on driveways or whatever other improvements I think I need, and just really like getting, instead of my initial underwriting, which was a pencil, getting pens in there to try to make sure I have the return that I expect before getting out of my due diligence period. But then, once the title work comes back as good, and it's clear that we're going to be able to actually close this, there's no title issues, there's no heirs somewhere in oblivion that we can't find, then I'll give the surveyor the green light to, at a minimum, do the boundary. And then also, if it really is a solid project and we're in good communication with the seller, and I'm very confident we're going to move forward, I'll have them do the full plat before we've actually purchased the property. It hasn't bit me yet. I'm going to say a word of caution to people who are looking to subdivide. If you don't own the property, like, there's a million things that can go wrong. I just had somebody who we were under contract with, who I'd put my due diligence payment, or I mean my earnest money payment down, literally sell the property to his cousin right in the middle of the contract. And obviously he can't do that, like, legally. Like, sure, I could hire an attorney and like try to go after him, but like, I don't have time for that. And who knows how much that's going to cost. And so I just had him pay me back for my, my costs and cancel the contract. But that could happen on a big deal. And maybe if it's a really big deal, it's worth hiring an attorney and going after. But just word of caution, that could happen before you spend a bunch of money that you can't get back on surveyors. Make sure you're going to close. But if I can get the surveyor done with the plat before closing, so that we can file essentially as soon as we close, that's a win. That's what I try. That's really what I try to do in most cases.
Okay. Is there a certain time period where when the earnest money becomes non-refundable?
Yeah, I mean, whatever you write in your contract. For me, typically it's 90 days, sometimes 60, sometimes 30, depending on the property. But yeah, but you can always write, I mean, you can write whatever you want in a contract. You can make the earnest money like contingent on like the survey being approved by the county if you want. If the seller knows what you're doing, and you have that conversation up front and you explain why you need a really long period of time. And this happens a lot on some of the larger, especially on the entitlement deals, where you have some large piece of land that's zoned agricultural or residential or whatever, and you're trying to get it zoned for industrial or high density multifamily or whatever. These properties will go under contract all the time with a very long period of time, and the whole offer is contingent upon the city municipality agreeing to let that lot be rezoned in this other way, or have whatever these other entitlements on it. So you can do the same thing with your properties, with residential splits, with recreational splits. Anyway, whatever you want to write in there, as long as you can get the seller to agree.
Yeah, of course, contingent upon approval. I was just curious what you usually use on your contracts.
I typically don't. I typically do 90-day due diligence. If they don't, if nobody says anything, I'll do a 90-day due diligence and a 120-day close. And I don't intend on taking all the time. But as you guys know, this can be a really lumpy cash flow business, right? You can have a lot of sales one month and then have nothing the next month. And so it helps to have a longer period of time to spread out my closings. So I don't just have a ton, if we have a great week in acquisitions and we get 4 or 5 properties under contract, I don't have them all. I have to bring all the money on this one week. I can spread them out, bring some forward, push some out.
Okay. Yeah, it's actually funny you mentioned that. We can round out the questions with this last one, and then we can open up to some Q&A. But I think when we were first speaking at the Casual Fridays REI event, we were talking about some of your notes and stuff too, because I realized that, like, on that 3-lot subdivide, I was like, oh, I might make about $250,000. This is fucking awesome. I should just do subdivides. But then I cutting off the small singles and doubles, little flips, was kind of cutting off, my other arm or whatever. So it seems like you really need to have a kind of healthy portfolio of simple cash flips and some notes and then some subdivides. So what's your overall composition look like of your business?
Yeah,
between all 3 of those?
Yeah, I think first I'll say, like, there's a million ways to have, maybe not a million, but there's so many ways to run a land business. There's people that focus on desert squares and low dollar owner finance stuff. There's people that only focus on large development deals. I'm kind of in the middle, right? I don't really do a lot. I don't really market to anything less than 5 acres, but the majority of the deals that come across my desk are off-market flips, right? We'll do a little bit of improvement. We'll clear a driveway, put in a fence or gate or something. We'll pretty it up and we'll sell it. That is the vast majority. And now subdividing is really just like a lens at which I look at all of my off-market deals that come through and some on-market. So if we're not able to quite, if it's a great property for subdividing, I know right off the bat that, hey, I'm probably going to be able to offer more than I would otherwise, because I can get a larger margin by forcing appreciation on this property. And so what it does, obviously, as you know, what it does is it allows you to do more deals, because now you have this way of making money even when somebody wants market or close to market on a property. So to say like composition wise, I'd say probably, I don't know, 80% of the deals that I do are flips, maybe 85, and maybe 15% of at least the initial on the acquisition side end up being subdivides. On the sales side, obviously it shifts, because now we're taking a lot and creating 8 lots or 24 lots or 13 lots or 3 or whatever. But on the acquisition side, probably 15% or so are development deals.
Okay, yeah, that's really helpful. So that way people can just kind of get an understanding of how you run your business at least. But I hear you. There's definitely developers where they're just focused on 7 and 8 figure gigantic entitlement deals and all that. So everyone's got their own way of doing things. So for the people that are just listening to this recording, I'm going to stop the actual recording for like the live podcast, just to provide an incentive for people to actually jump on live for the Q&A section that everyone else is going to be able to benefit from. But before I open it up, what is the best way for folks to get in touch with you, and who do you want to contact? Who are you looking to get in touch with?
Yeah, no, great question. So I kind of recently have started being active on Twitter. My Twitter handle is @scouting, the number 4, and then land, scouting for land. So that'd be a great way to get in touch with me. I am also starting to take on one-on-one coaching clients, and I started a website, my name, justinpiche.com. So if somebody who is like already a land investor, right, that understands how to comp, understands how to do deals, maybe they're a solopreneur or have one VA or whatever, and they're looking to scale their business or figure out how to do subdivides, or just kind of maybe get to the next level, I'd love to talk to you and see if we could work together. I've spent a lot of money and time learning from other people, and like I can't claim that this stuff that I've learned has all been from me. I mean, I've learned this on the backs of people who have failed immensely before me, and then I failed a bunch myself to kind of figure out this business. And I believe firmly that you can get where you want to go faster by paying the right people to help you, who are invested in your success. And anyway, if somebody's interested, I'd love to just chat and see if it's something we can work together on.
All right, excellent, perfect. Well, thank you very much for taking the time out of your day to jump on here, adding tons of value. So honestly, this is already a mini course. I mean, we've probably added too much value, so but yeah, definitely appreciate it. And all right, we'll stop that recording and then we'll just jump on. So anyone that wants to like ask a question, you can unmute yourself, or you can raise hands. It's not super formal. However you want to do this. And I think this is like yeah, go ahead, Beskar. I don't think I have to like enable your mic or anything on this Zoom. Yeah.
Okay.
Yeah, no.
Justin, so when you started, did you have capital to deploy yourself, or how were you buying? Or were you double closing? How was that working?
Yeah, I had capital when I started. That's really, honestly, like full disclosure, that's what allowed me to be so fast at replacing my income. I had my wife and I was in the Navy starting in 2012. My wife worked for Chevron starting in 2012. We had no kids. We were both gone half the year, like paying barely anything in rent. And so we just saved, invested, and we had, a sizable chunk of capital to deploy starting out. And then as we've scaled, it's, once you've kind of proven the concept and had some success, hasn't been super hard to get unsecured promissory notes from other investors, or from personal, acquaintances, et cetera, partnerships on deals, bank lines of credit, bank loans on property. Yeah.
How did you transition from using your own funds to being able to obtain OPM, other people's money, or bank money? How did that transition happen, and how do you recommend somebody else? I mean, I'm probably in that boat. I've dumped my own money and it doesn't recycle fast enough.
Yeah, that's exactly right.
It's
super challenging as you've probably seen, as you're scaling, that's when it's hard, right? If you're just, and I keep thinking maybe one day I'll hit steady state and then it'll just be great because I'll be able to take profits out of the business much more like easily and deploy the same capital over and over again. but that's not what's been happening, right? I've been just scaling, doing more deals, more marketing, et cetera. And as you scale, your money gets tied up longer, can't. And so it was really out of necessity that I started taking on other people's money. I went after low barrier to entry kind of loans first, or like debt first. So lines of credit, business lines of credit, whatever I could get that a bank would allow me to have access to, just based on my own, credit score, assets, financial performance, tax returns, et cetera. So that was the first kind of step, and I was probably able to get 200, 250, somewhere in that range of those type of loans. And then I went to investors that I knew, or family members or whatever that I knew had cash just sitting on the sidelines, and they knew what I was doing. And I just said, hey, I'm looking for a promissory note, a line, not even a line of credit, just a promissory note. And my initial thought was, hey, I have all of these owner finance notes. Rather than selling them, I know that I can cover the interest service and promissory note repayment based on my cash flow from my notes. And so I'll just make sure I'm overcapitalizing these promissory notes to keep, protect my friends and family.
So you're borrowing against those notes?
No. I'm not actually hypothecating them. Okay. It's more of it wouldn't pass like a controls audit, but it's more of like a self kind of imposed protection on them. So I won't think, anyway, that was at least my own internal. You don't have to do that. Like, people just take unsecured promissory notes and know that they can pay it based on the profits of the business. I wanted to make sure I was capitalized, especially in this kind of rate environment. I'm not looking to go bankrupt. So that was the next thing I went after, was unsecured promissory notes. And then once I've kind of exhausted most of those, probably about 700 grand worth of that. Now, then the next source for capital is, if we need it, is partnerships. So whenever I basically do a 13-week cash flow analysis, I have like a running 13-week cash flow analysis for the business. And I put in, every property purchase, every capital improvement type thing that we need, my payroll, bonuses, whatever else we have, costs, et cetera. And then I have an asset balance sheet below that adjusts based on us selling assets, et cetera. And I just, I update that weekly. I look at that, and when I see a cash position that's not favorable, I'm getting uncomfortable. Either it goes negative, or gets down into like less than 50 grand of like kind of reserve cash. That's when I start thinking, okay, I need to, this deal 3 months out, I guess 13 weeks is 3 months, 2 months out, 60 days out, whatever. I need to line up somebody to fund that, because the way these deals are closing and cash is flowing back in, I know that I'm going to be in an uncomfortable position. And that's when I'll start reaching out to people. And honestly, just through like posting on Twitter, posting on LinkedIn, I've had people in my network that have reached out and expressed interest in investing in deals. And so that's really the way I've kind of been getting leads for people who are interested, is just through posting about what I'm doing.
What do you normally borrow at? Like, if you were to make a pitch to a new private money lender, what will your terms look like?
Right now, most of my unsecured promissory notes are at 10%. And then I have, those were done in early 2022. So I think they'd probably not be quite so good right now. I have one that I did, that I opened up like 6 months ago or 5 months ago at 12% for $100,000.
And these are
actually, go ahead.
Private people. These are just people from your network.
Yeah.
Okay.
Yeah, like people like I knew from high school, like that are successful now in their own right, that are looking for ways to invest in alternate investments. People people who knew me growing up, like family, friends, if you will. Anybody really. Typically,
how long do you recycle their cash for them within? Or is it an open credit for you? Like, somebody said you've got 100,000 at 12%. Do they expect in perpetuity?
No, I have it. Each one they're all different. I have one that's kind of like essentially a 10-year understood. There's no real like end of term limit on it, but it's essentially a 10-year line of credit that I've been extended. And then I have one that's a 3-year. I have one that's a 5-year. I have one that's a 1-year. And that one's actually a line of credit where if I pay him back and leave capital in his account, I don't get paid. I don't have to pay interest on it. But when I have it deployed, I do. Yeah, it's really whatever. Obviously the longer term, the better for you. And then in the unsecured promissory notes, I've let those lenders know, hey, Like if you need your money sooner, I can get it sooner, but I need a year to unwind it. Like I can't just have it in a month if I'm really truly planning this business. Like these cycles of deals are not weeks long; they're 6-9 months long, and I need to be able to plan for that capital leaving. So
man, that's amazing. Now, last question before I know I've got a lot of questions, but
no, that's great.
What percentage? How is your current investing portfolio or workflow split up between subdivides, between like quick flips, between large acreage flipping? What are you going after like actively, and what does that breakdown look like?
Yeah, so I'm very general in my marketing. Some people go and target various niche specific things in specific areas, and that's great. I mean, I think there's a lot of money to be made if you really focus heavily in a market and you know it like the back of your hand. But I am in 4 states right now where we're actively marketing to every property that's greater than 5 acres in the entire state. And so it's kind of like a broad strokes type approach, right? Like, hey, whatever comes into our lap, we will look at. And so really it's whatever people are selling. I have a couple contracts that I signed in the last week on smaller acreages, like a couple of 3 acre, 5 acre lots. It was a package of 3 to 5 acre lots. And that's fine. We'll sell each of those for probably about 20. Average purchase price is maybe 8 for each of the lots, somewhere there. That's kind of the smaller end of the deals that I'll do. And then I have a few 100-acre lots that I'm under contract to purchase, mostly rural kind of hunting tracts. I just listed a hunting tract in Northeast Alabama that was 85 acres that we bought for $90K, put $60,000 into it, approving a road, and now we have it listed at $275. So there's a few deals like that, but I would say those are far and few between. Typically, the deal size I'm working on is like a buy in the 40 to 50, a sell in the 80 to 120 range.
Awesome. Thank you. Very helpful.
Hey, Justin, with that general approach that you have, what marketing volume are you doing? Whether that's mailers, whatever.
Yeah. So the way my team is structured, we have 5 people on the acquisitions team, an acquisitions manager. I have who does closings as well. She's like an acquisitions manager plus negotiator closer. And then I have another negotiator closer. And then I have 2 full-time texters and 1 full-time ringless voicemail person. And so with the volume that they're doing, we send around 1,000 ringless voicemails a day. I don't know how many actually drop, maybe 500, 600 actually drop a day. And we send, probably like 7,500 texts a day right now. I think we were doing more, but we found it really challenging to manage the volume effectively. And so we kind of pared it back. I figured, hey, higher quality lead management is better than more lead management. And so we're in the process of pushing that volume higher, potentially hiring somebody else. But that's about the current marketing volume. And then the way I do marketing campaigns is a multi-touch marketing campaign where we start out with 2 weeks of texting in a market. And so each campaign will be about 10,000 contacts. And so if you're texting on launch control, you have basically per market, or per phone number, you have a max of 1,250 texts per day that you can send. And so the idea behind 10,000 is that we can text 4 days a week full, and we have Friday to clean up the leads and just make sure nothing is just like out there left. And then I have somebody work on the weekends just to follow up, because people will text, but they only work a couple hours each day just to make sure we are touching base with anybody who's texted us from the week or left a voicemail from the week. And then the next week we do another 4 days full texting that market. And then that's the first contact for that marketing campaign. And then 3 weeks later, we drop voicemails on all those. And then 3 weeks later, we drop the follow-up text. 3 weeks later, we drop a second ringless voicemail. And then after that, we get all of the people who haven't responded. We get all the people who we didn't have any cell phone numbers for, or whatever. We have their addresses, and we'll pick kind of probably the best, 5,000 or so, and we'll send those to mail. We'll mail those folks. And then it's basically done for that period of time. We're not really going to hit those people again until maybe like the next year, or the next time we hit that market. But that's how we're doing. And then the idea is really just scaling that. I mean, you can line up. So basically every 2 weeks you can start a new campaign. The way if you overlap it the right way, and then you just add more markets on top to scale it. So maybe that's all of Alabama, and then we do another market in Georgia. We do the same thing. Maybe do another market in Virginia. We do the same thing. South Carolina, whatever state you want to enter. That's how we're doing things right now.
Got it. Thank you, man. Appreciate it. So with that, all this marketing that you're doing, what is your sense right now in the land space in terms of conversions, in terms of success of being able to sell properties quick? As you said before, selling at the same rate, right, as 2 years ago, and we all have seen that. But what is your sense right now of where we are at and where we're heading, more importantly?
Yeah, that's a good question. I mean, things have definitely slowed down. I mean, hopefully you aren't feeling that, but I am feeling that things are slowing down. I'm finding it not super challenging to get properties under contract on the buy side, but negotiations have been hard because people are still hung up on certain values that they maybe could have gotten last year. And I'm seeing the sales price fall. And so, we're dropping prices on properties every 2 weeks or so just to keep things moving. And I just know that if all the comps are showing we can get 100,000 for the property, I'm expecting 90,000 or 85,000. And so when I'm offering on the deals, I'm offering with that expectation. And so it has been harder to get. I mean, it is not super easy to get properties under contract. We're having to negotiate pretty hard with people. Ask them the question of like, well, why do you think your property is worth that much? Like, what do you? I'm just, especially on the development deals, it's a little bit easier on the development deals because we will just show them our comps. We'll just be like, hey, I'm trying to buy your property at market value. This is what I'm seeing as market value, and I'll pull a price to comp report and I'll send it to them. I'll look at every property that's sold in the entire region and I'll say, this is what I think your property is worth. This is why I think it's worth this. I'd love to buy it at that price because I know I can add value. For the flips, obviously, you can't really do that because if you do, they're not going to sell to you for 50, 60% of that, 40% of that. But on the development deals, you can. But it's still been hard. And people who, even in the face of like very obvious valuations for their properties, still demand 1.5, 2 times market. And you're just like, okay, guys, obviously we're not going to do a deal here. Where we're going, I'm not like a doom and gloom type person. I think that if you have the right property in the market, there's always people that are looking for vacant land. If you haven't already adopted owner financing as a way to move properties quicker, I highly recommend it. I didn't do anything in 2021, or maybe about halfway through 2022. I didn't do any owner financing, and then we kind of switched completely to offering owner financing on everything. The note market is still fantastic from what I've seen. I've not had any trouble selling quality mortgages or quality deeds of trust to people on the secondary market. And so that's really, if I can get a property under contract with 10, 15, 20% down at a favorable interest rate for a reasonably short term, 5 to 10 years, then I will do that. Know that my capital is going to be tied up, let the note season for a few months, and then listen on the secondary marketplace, targeting a sale yield of like 18, 19%, knowing that I can sell it pretty quickly for 18 to 20% yield right now. And so if you underwrite that as your tool for sales into your deals, you might be able to do more, you might be able to do more deals that way. Because I've been able to turn things quicker that way.
Right. Yeah. Well, man, thank you. Appreciate it.
Absolutely.
Hey, a couple other questions. I was hearing you explain your marketing volume and channels. And I mean, that's a crazy volume. I mean, 7,500 texts sent daily, 4 days a week. That's a significant number. I think the max I've ever sent, probably in a month, has been no more than 10,000 messages. But you mentioned you have 2 dedicated acquisitions people. Are they local to the States? They're all virtual?
Yeah, 2 dedicated texting team members, and then 1 dedicated ringless voicemail, and then 2 almost like supervisors. One's really the manager of the team, and the other is just like kind of a negotiator, comper, like actually customer facing interface. They're all overseas.
Overseas. How did you train them for negotiations and sales?
Yeah, man, that is a great question. So two of them, the two who are actually negotiating right now, they have sales backgrounds. So they're both in the Philippines. They both worked for actually the same company. I hired one, and then she referred me the other. And they worked for a travel agency whose whole job was to upsell people on tickets. Like basically like you could go to southwest.com and buy an airline ticket for $500. Well, they would sell you the same ticket for $700 or $800. Like that was their whole job. It was like a very hard kind of sales job. And so they came with a lot of like, overcoming doubt, a lot of asking the right questions, getting micro agreement type sales skills. So really it was more training them how to comp, training them how to look at property, training them how to like speak like somebody in the US would understand about their property, that type of thing. And honestly, so the first VA, my acquisitions manager, she I hired her through Clint Turner's Learn Land. Hold on, guys. I just opened my laptop and my shut off. I'm sure you can still hear me. Maybe you can still see me, but I can't see you.
We can still hear you.
Okay, well, let me log back in. There we go. Okay, sorry about that. I was like fiddling with my laptop. I hired her through Clint Turner's Learn Land like VA hiring program. Is this still being recorded, Mason, or no?
Yeah, it is.
Okay, is this part of the podcast or no?
I was going to like clip it, and for people that register but weren't able to join because of the switch over to Zoom, I was going to share the full recording with them. But then on the podcast version, I would just cut it off prior to the Q&A. I mean,
yeah, honestly, I don't have any hot takes to say. I just wanted to make sure I knew what was being recorded or not. So I was super happy with the way that Clint Turner's team trained my first VA. However, I think that most of that was because she is just exceptional. Like just like an exceptional person, like employee, very sharp, like understands sales really well. I think that I've stopped hiring through that program mainly because I find that when you sign up for it, right? They find somebody for you. It's an easy button, right? They'll source an employee, they'll bring them into their team, they'll train them how to do texting, launch control, they'll train them how to negotiate, etc., how to comp, how to use CRMs, but you don't get to personally interview them before you're like assigned them. And I really like to talk to people. I like to understand, how we're going to interact together. I want to know their level of English, like speaking skill before I bring them onto the team, because this is especially when, dealing in the Southeast United States, like you need to be able to, you can't sound like completely foreign to a lot of these sellers. It's just the truth. I mean, a lot of these people live in very rural areas. They want to talk to, they'll just hang up the phone on you. And it's tough. It's really tough to get over that kind of the bias that people have towards accents that they don't recognize or aren't comfortable with. And so now what I do when hiring, and I actually just posted a little video on Twitter. A little video on Twitter, very short, very uncut, I used Loom and just kind of quickly went through a process. So it's like I'm not a videographer by any stretch, but if you want to check it out, go on there. And it's kind of my easy hiring process. I use a program called RemoteCo. It's an online jobs board that hires in Latin America. I find that Latin American accents, Spanish accents are just they're really common in the US, and it's a much more digestible accent. I also really like the time zone for folks that live in Latin America. It's not quite as hard for them. Honestly, it's not as hard on them physically because they're in similar time zone to you. They're not staying up all night. And I mean, that's brutal.
Yeah.
It's brutal. And then I use a video interview software called My Interview. And so what I'll do is I'll post a job. I'll use ChatGPT, help me write it, but I'll get a job scope, whatever, full together. I'll post it on RemoteCo, which is RemoteCo is about $200 for a month. Usually you probably close it within a month and only pay that $200, but maybe it takes 2 months, maybe it's $400. And then I'll create a My Interview video interview, and I'll just record myself introducing the company, kind of describing the role in my own words, and asking folks to answer some questions and record a video of themselves, kind of just talking about why they're interested in this job and like what motivates them. Something simple, but the whole purpose of that video is just to gauge English skills, spoken English skills. And then that's like so you post a job, you get a bunch of applicants, you just send them a DM with the link to the My Interview and tell them it closes in 2 weeks. And like, that's it, maybe 20 total minutes of work, 30 minutes total of work. And I'm able to interview, like screen 50 people very quickly. The videos are only a minute long, and you can tell within the first 5 seconds, how well their English is. Pick the best 4, 5, 6, schedule interviews with them, and then, hire from there. That's kind of how I do things now.
Amazing. I'm taking notes because I'm lacking a closer in my business, and like I hate getting on the phone. I don't think I'm made for sales. I can do other stuff, but not sales. So need salespeople. Now, what type of compensation do you offer your acquisition managers?
Yeah, obviously it depends on where they are, but so far the Philippines and Latin America are comparable. In fact, I think in Latin America, typically I'm having a lower base salary starting than the Philippines right now. Let's see, honestly, anywhere between $5 and $12 an hour is kind of the range at which I have most of my team base compensation at. So that equates to anywhere between like $800 to $2,200, $2,300 a month in total base compensation. And then the way that I structure compensation for the team is I pay it's weighted based on their, like, if you took all their salaries and base salaries and added them together and then divided one person's salary by the total salary, that's their like weighting number. And that's a multiplier times 3% of gross profits that I distribute as commission to the team. And some people might find that to be a high number, but the reason why I do that is because I want the entire team moving in the same direction. I don't want people competing in the sense that like they're taking leads from one another or like having animosity towards each other. I like competition, but it's more like, can we beat ourselves from last month? So can I be the better acquisitions person and get more deals under contract than, Jerry over here who's whatever. And so they get bonuses based on us selling, the whole team selling property. And that's paid out at the end of the month. It gets weird when you do like subdivides. But typically what we'll do is once we're in the green, so to speak, or in the black, I guess is the right financial term, for that, then whatever gross profit is realized in that month from that development deal, we'll take 3% of that and I will commission it out to the team at the end of the month.
Excellent. Amazing, man. Thank you. This was great info.
Yeah, happy to share.
I was wondering, what's the average time by the way, I forgot to ask, do you have a hard stop? I actually have a hard stop, but it's like at 3. What about you? I don't want to talk your ear off all day, Justin.
I should probably check Slack. I have like 15 unread messages, but nothing pressing. I don't have a hard stop yet.
Okay.
I got to pick up my kids in 2 hours, so got plenty of time there.
All right, cool. Yeah, I was just curious, like, what's the average time that your VA will stick around with you?
I have not had a single person leave. I have had to let go of 5 people. And honestly, 4 of them were because we just we stopped doing as much mail. I was doing a lot of mail and I was having people physically scrub, like put eyes on in Land ID every property on our mailing list before sending the mail out. Because I could pay them $5 an hour and they could get through. Basically, it was a great return on investment because I would send half of the mail I would send otherwise for the same amount of leads and save me thousands of dollars in marketing costs a month. So that's why I was doing it. But that was probably 6 months ago. I laid those people off because I stopped doing quite as much mail and I shifted much more heavily to lower dollar per lead marketing channels like texting and ringless voicemail. We still do mail, but we just, I had to cut some costs somewhere, and that was where I cut them. And then the other person I let go of as a part of that, one was kind of a couple of reasons. One was because multiple of those guys were being paid through him. Like he was my first employee, and his like brother-in-laws like joined the team. They were part of that scrubbing team, if you will, that got laid off. And it was really challenging to just like let your brother-in-law go. But the real reason was he was my first employee and he couldn't scale with the team. Like we needed more from him. We needed him to level up with our sales side. and he was just missing things, missing details, like falling behind. And it was more work to keep him going than it was worth. And so we let him go during that time too. But nobody has left me yet, knock on wood, of their own accord.
Okay, yeah, that's cool. What's like the KPIs that you're usually having them shoot for? Like signed contracts per week or stuff like that?
Yeah, we monitor mostly like the inputs, because at least my philosophy is like the inputs are going to drive the results. And so like I want to make sure, I want to see how many leads we've pushed to our CRM. So initial text sent, or like initial communications, RVMs or texts or mailers, how many are we doing? How many have actually hit mailboxes or hit inboxes or hit voicemail inboxes, whatever, that week. And then I want to know at the end of the week how many leads we pushed to our CRM that we would deem an actual lead, right? Because until somebody like expresses some interest in selling, and you're interested and the price somewhat matches, it's not really a lead. But that kind of gives me a pulse on how good is our data. I think the biggest determinant of how many leads are pushed per initial outbound message or like contact sent is really what's the quality of our data. If we have a really horrible week where we've sent 25,000 texts and 5,000 ringless voicemails, and we've only pushed like 15 leads or something, like 2 a day, I'm like, what is going on? Like, how is this so horrible that we're only, because, if you push 15 leads, you might only get 1-2 contracts out of that, maybe. Like, you're not, anyway. Yeah, but so that actually happened to us maybe two weeks ago. We had just like these 2 weeks in a row that were horrible. And we've been back and I was like, why is this horrible? We looked into it, and the data that the couple counties that we were doing that we skip traced, etc., it was just so bad. We had so many wrong numbers, so many like, who is this wrong number type thing. And so just the skip tracing data was terrible. And so anyway, bad 2 weeks. But then this last week, it's been freaking, like, my team's been utterly slammed with leads. Like 6-7 a day are being pushed and having to be followed up with and negotiated with. So, just ideally you level that out, but it's been a whirlwind. So anyway, we monitor the inputs. To answer your question, that was a long way to talk about it, but we monitor the inputs. Those are the KPIs. Are we doing what we need to do? The results will follow.
Okay. Yeah, it reminds me, like, it's Bill Belichick talks about, like, you focus on each play in football and then the score will take care of itself type of thing.
Yeah, I mean, that's obviously one of the greatest coaches ever, but I think that's a great kind of philosophy. The results are the effect of doing what you need to do.
Yeah, right on. That makes sense. Cool. All right. Well, I've got most of my questions answered here, which is awesome. Really appreciate your time. Is there anyone else that wants to jump on? Dave, Mike, Julian? Y'all have not said anything. Might be multitasking. If not, we'll just part ways here and have to do it again or something. Stay in touch.
Yeah.
You see her? You got something? What's going on?
No. I'm good. Thanks so much, Justin. Let's see.
Yeah, absolutely. If you guys, just real quick, if you guys do have notes you want to sell, I mean, obviously there's a lot of note buyers out there. I've been very, very happy with PaperStack as like a listing platform. If you've not used their service, it's super slick. I was a little, before I started listing notes on there, I was like, how's this going to work? But it is a great platform for listing mortgages. They take care of everything, and it's a pretty reasonable fee. I think the escrow and audit fee, which is essentially their take, right? That's what gets cut out of the middle. For me as a seller, has been $500 per note, $250 as their fee, and then another like $250 as an escrow fee. But anyway, just a quick plug. Been happy with them.
Did you say that you were buying notes too, or just selling notes?
No, I'm just selling notes right now as I need to raise cash, help balance the cash flow. I really like mortgages personally. Like, I like the steady income that comes with having a large note portfolio, knowing that like I have the income to cover OpEx, some portion of OpEx or salaries or whatever for that month, regardless of whether we sell. It helps kind of with the lumpiness of this business. But I have, as I've been scaling and buying more properties, I've been deploying more capital. And so I've sold a few notes recently just to generate the cash to not have to take on partners on deals and give up some equity on some deals that I think are, that I have a lot high conviction for.
Got it. Oh, I forgot to ask, do you use a data manager or just one of your team members that manages all of the lists and skip tracing?
Yeah, no, I have. Yeah. So just real quick team structure. I have those five acquisitions team members. I have a transaction coordinator. It's kind of like my assistant when it comes to just paperwork, managing closings, etc. And then I have a sales manager and 2 sales team members. And the sales manager is US based, and he manages all the relationships with the realtors and the sales team. We list all our properties with realtors once we close, but we also market ourselves on Lands of America, on Facebook, etc. I don't know. My philosophy is kind of like, hey, if we can get more eyeballs on this to get these things to move faster, we should. The way we work realtor commissions is if we once we sign the contract with the realtor to list it, like we're going to give them our seller's commission. But what we ask from the realtors is, hey, if we bring you a buyer that we've spent hundreds, if not thousands of dollars marketing to try to find, and we hand deliver this to you, and like all you have to do is get the sign this contract that you write up, like we ask that you don't take the buyer's commission as well. That's kind of the agreement. And then I have a marketing manager who's a US based. She's actually a data scientist, and she does like pricing for mailers. She pulls our lists. She manages like our marketing campaign data flow, making sure like all of our contacts are uploaded into our CRM. Then when we export it into text or export it into voicemail or export it into mail, she's making sure we're attaching the right tags to data so that we don't double text or waste money in between. All the kind of data management through that process, she manages.
Okay, cool. Do y'all use REI Sift or anything to cross-check lists?
No, we do VLOOKUPs, Excel typically but actually I just started doing a few months ago was I switched my entire acquisition CRM to Follow Up Boss. And I don't know if you guys have used Follow Up Boss before. It's really designed for real estate agents and brokers. We've been using it on the sales side of the business since I started in 2021 to keep track of our buyers list, send emails out, create notes of people, segment them into what type of properties they want. But I switched to the acquisition side as well, and it's been awesome. I mean, so basically when we export a list of data from a state, maybe it's like 150,000 lines of data or whatever, we'll upload that entire data set once we skip trace it, we'll upload that entire data set into Follow Up Boss. And for everybody who has a phone number and a name, that's a unique contact. And so we'll create all these contacts. And then that's like the basis for our data. So like that's the starting point. And then when we want to pull out marketing campaigns, we'll segment those pieces of data, and then we'll add a tag to all of them with what their marketing campaign name is. And then when we want to start the marketing campaign, we just export everything with that tag and format it, upload it into Launch Control to start our marketing campaign. When we finished marketing that campaign, we can add another tag that basically says like first text sent or something like that. So now we know what the marketing campaign name is and where they are in the marketing flow. And then we have a schedule that my acquisitions manager looks at, so she knows, hey, it's Monday. I know that on Alabama marketing campaign 1, I'm sending out the second, like the follow-up texts, and on Georgia campaign 4, I'm sending out the initial texts, and on whatever state campaign 3, I'm sending out the voicemails, etc. And it flows pretty nicely.
Okay, nice. Yeah, these are all things I've like tried to set up, but being a one-man band or me and one other person, it just all falls apart.
Yeah, dude,
consistently.
There's no way I could do. I don't have the. I think if you guys think about you and your business, I think obviously Bhaskar had some introspection, saying, "Hey, I'm not really a sales guy. I am not really like a details guy, right? I'm like I see something and I go after it. As disorganized as it can be, but I'm like, if you think about it, are you process driven or results driven? Right. For me, I'm results driven. Like I will go after something and I will break things on the way there. And then my hope is that I'll bring other people in to put the whole process back together and make it repeatable. Anyway, I know that about myself. And so I bring people in who are much better at doing that than I am.
Awesome. Yeah, that's how it's supposed to work, right? Building the business. Perfect.
Yeah.
Okay. Awesome. Well, did not intend on having these extra questions, so it's bonus stuff here, but I am all out of questions now. So thank you again for
Yeah,
everything.
no, it's been a lot of fun. Thanks, Mason, for having me, and thanks everybody for joining. Appreciate talking to you. If you guys want, just happy to reach out to me on Twitter, or honestly, my that little website has like a book a call thing. Happy to just book a call and we can talk through something. I'm not like, I don't know, it's tough. I'm not like, I don't want to ever be seen as a guru. Like, I'm not a guru. I'm an operator. Like, I like to run a business. I like to do deals. But I do find a lot of joy and like fulfillment in helping others. And so anyway, that's kind of why I've set up that website.
Okay.
I've missed that website as I was away from my desk, but I definitely want to connect with you. I'm local to Houston as well.
Oh man, we should I'd love to get coffee or something sometime.
Beautiful.
I'm in the Heights. Where are you at, Bhaskar?
I'm right here so my office where I'm at is like Bissonnet and Beltway, Southwest side.
Okay.
And I don't live too far from here, but I can come anywhere. I can come to you.
Yeah, I know. I'd love to meet up.
Awesome.
I just got a second car. I had sold my car, and so I have a baby number 3 on the way, and so I bought a minivan.
Oh,
so
nice.
now I can actually drive places instead of riding my bike, which was nice. But yeah,
awesome. Get together for sure. I mean, I have an office location where we can come and chat, or I can meet you for lunch one of these days.
Yeah, I just put my cell phone in the chat for those of you who are on
Perfect.
this live call. But feel free to shoot me a text.
Beautiful, man. Thank you.
Absolutely.
Thank you, Esteem. Thank you, Mason.
Thank you.
Sure.
Thanks, Mason.
Thanks for putting this together, man. This is very helpful for the rest of us.
Good. Perfect. Yeah, thanks for joining. I'm glad you all liked it. Hey guys, I appreciate you taking the time to listen or watch this episode. As you might have noticed, we don't run ads, but what I would like you to do is just subscribe to our YouTube channel. That would help us out tremendously. You don't even have to leave a review, but if you do feel like you would gain a lot of value from this episode, feel free to share it with your friends and comment, like, subscribe, all that. But subscribing to YouTube would be what helps us the most. That's the only thing I ask. Thanks a lot. And if you do want to get in touch with me, feel free to email me at mason@scalablerei.com. Thanks a lot.